The U.S. economy performed slightly better in the third quarter than first estimated. That's according to data from the Commerce Department on Thursday, which showed gross domestic product increased at an annual rate of 4.4%, the fastest pace in 2 years. Economists polled by Reuters had forecast GDP would be unrevised from an initial estimate of 4.3%. The slight upward revision to third-quarter growth reflected upgrades to exports and business investment. Consumer spending, which accounts for more than two-thirds of U.S. GDP, grew at a solid rate of 3.5% in the third quarter. But underlying demand from American consumers and businesses, measured by final sales to private purchasers, was revised down slightly. Economic activity has assumed a so-called K-shaped pattern, with higher-income households and big corporations doing the heavy lifting. Economists have blamed this phenomenon on President Donald Trump's policies, including aggressive import tariffs, which have raised prices. The latest inflation data, also released on Thursday, showed prices continued to rise gradually. The Personal Consumption Expenditures Price Index increased 0.2% in November, matching October's pace. That put the annual inflation rate through November at 2.8%. It's been hovering at or near that rate for several months, still above the Federal Reserve's target rate of 2%. The Fed is expected to leave interest rates unchanged at its policy meeting next week.